This past week was hands down one of the best and most profitable trading weeks I have ever had as a Forex trader. And the best part, I took only 4 trades, I spent less than an hour each trading session and relied entirely on a simple trading strategy that literally anyone can learn. Okay everyone, so the first and honestly the most important step in this trading strategy is identifying what I like to call high quality opportunity zones. Now these opportunity zones are simply key turning points, or let's say significant breaks in market structure. So what they do is they clearly indicate when the current market is likely weakening or actually about to reverse, which allows us to enter the trade at the very start of a new move. So let's actually walk you through exactly how we identify these opportunity zones step by step, and for some reason I'm very leaning to Euro USD today, so we're gonna use that as our example. So whenever I start my trading process, or let's say the whole trading session, the first thing I do is closely watch the recent price action to figure out, which way the market is moving in the short term. And honestly, this is really straightforward because, well, if the price is consistently making higher highs and higher lows, that's obviously a bullish market trend, or what we are calling an uptrend. And then on the other hand, if the price is consistently forming those lower highs and lower lows, that's clearly indicating a bearish market trend or a downtrend. Okay, so the next step in our trading analysis is, of course, we have to visually mark this clear market trend on our charts. And personally, my favorite method is using a simple yet powerful ascending trendline tool here in TradingView. Now you could also use horizontal support and resistance levels to highlight the swing points very clearly. However, since this specific trading strategy revolves around trendline breaks, our primary focus is always on the ascending trendline itself. So once you sort that out, which means you have your uptrend or a downtrend marked on your chart, here is the critical part that actually separates profitable traders from the impulsive ones, and that is we never blindly enter a trade simply because the market price touches our marked levels or trend lines. What we want to do instead is we patiently wait until we clearly see evidence that the market momentum is fading. And from my own trading experience, I can tell you that the most reliable early indication of weakening momentum in a bullish market occurs when the price fails to form a new higher high, or let's say if you are in a bearish market, it fails to form a new lower low. Okay, so returning to our Euro USD trading example, you can now actually observe how the market price clearly failed to create another higher high right over here. What does it tell us is that this indicates that the bullish momentum is significantly weakening. They did not manage to go higher, and sellers, they might soon take control of the market. Now what I'm going to say next is probably the most boring shit you will ever hear, but in this trading strategy, patience is actually key, because to officially confirm our trading opportunity zone, what we have to do? Well, we have to wait for the price to clearly break below our ascending trend line or the nearest horizontal support level if you chose to draw that way. So once this break decisively happens, we have full confirmation that this bullish momentum is officially over, because, well, the sellers, they are stepping into the market, which again creates a strong opportunity for our next profitable trade. So now that we have clearly identified our opportunity zone, the next step is absolutely critical. So what I mean by that is that instead of rushing straight into the trade at potentially poor prices, we patiently wait for the market to pull back and retest our clearly defined opportunity zone. So I call this powerful trading confirmation the 1, 2, 3 pattern, which involves the initial breakout, a brief pullback, and finally a continuation move. And what specifically we are looking for is a reliable reversal candlestick patterns at the zone, clearly signaling that the buyers or sellers are stepping back into the market and confirming our anticipated trend shift. Now, from my trading experience, the most reliable candlestick patterns that you want to focus on when using this trading strategy, or generally trading the Forex market, are the engulfing candles. So particularly the bearish engulfing, which indicates a potential reversal to the downside, or we also have the bullish engulfing candlestick, which signals possible upward reversals. And I also have to mention that the pin bars, these candlesticks where they have very long wicks either at the top or the bottom, they're also very good confirmation candles, because most of the time they are clearly rejecting the key price levels, and in many cases I have made so much money trading them. Okay guys, so how about we just go ahead and apply this to our EURUSD trading example, and you can actually notice carefully what's happening in the market right right now. So as you can see, after clearly breaking below our ascending trend line and the important support zone, if we're gonna use both of these ways, the market has pulled back perfectly into our previously identified opportunity zone. This previous support area is now acting as a resistance, and at this point we clearly see a strong bearish engulfing candle forming, confirming our bearish analysis. Now the reason, guys, I'm telling you to wait for the pullback to that opportunity zone is that sometimes you may think that this uptrend is breaking towards the downside and you're gonna enter right away, but then it seems like this move was just a fake out and you get stopped out and you lose money. So what that pullback initially does, as I said, you just wait for the price to retest, and of course if that gives you, a strong bearish confirmation, some strong bearish candlestick reversal, you know that the sellers, they kind of backed up this level, there's not enough buying pressure in the market, and you should be good to go because, as I said, it retested once and it should continue going down. Okay, so at this point we have got several strong confirmations working in our favor. So now, before we actually jump into the trade, there's one more crucial step that we absolutely cannot overlook, and that's carefully planning our stop loss and take profit levels. Because if you regularly settle for trades with poor risk to reward ratio, it only takes a few losses to quickly erase your hard-earned profits. So to help you fully grasp this, let's walk you through exactly how you should place your stop loss and take profit levels, and of course we're gonna be using the Euro USD example for that absolute clarity. Now, when it comes to your stop loss should not be placed based on any random point on the chart. It needs to logically protect your trading idea. So specifically in this Euro USD bearish trading example, the ideal spot for our stop loss would be clearly positioned just above this recent resistance zone, and even more importantly, above the most recent swing high. And placing our stop loss here is very powerful because it gives our trade enough breathing room. So if the market price happens to reverse and pushes past these key structural points, it's very clear evidence that our bearish idea isn't valid anymore, and at that point we just simply close the trade for a small loss, protecting our trading capital effectively. Now, when it comes to setting up your take profit targets, you also have to be very logical and realistic. It means clearly identifying maybe significant support or resistance zones, recent swing points, or even major psychological price levels, because we know that price naturally gravitates towards these important areas. So in our Euro USD trading example, we can clearly spot the next significant support level, making it a logical and realistic target. So now you have successfully entered your trade, but let me tell you that your job isn't done yet. In fact, this is the next part, which is managing your trade and keeping your emotions in check is often the most challenging yet important step of all. And think about this scenario, because we have all experienced it. You enter the trade, the price starts moving nicely into your favor, and you're feeling good, and then suddenly it begins to pull back. This is exactly where most traders panic and they make impulsive decisions. Instead, what I want you to do is to remind yourself of a very simple fact. As long as the price hasn't hit your stop loss level, your trade is still perfectly valid. Trust your analysis, stay calm and give the market room to breathe. Because in many cases, the price often retests key levels before they continue towards your target, and that's a complete normal market behavior. Now, we really want to help you guys manage your emotions and lock in profits along the way. So here are the two straightforward yet powerful methods that I personally recommend. So the first one is the partial profit taking, which means once your trade moves about halfway toward your take profit level, you can consider closing out a part of your position. What it does is just basically secure some early gains and takes the pressure off if the market decides to reverse. And the next option you can do is trailing stop loss. So when your trade is comfortably in profit, you can move your stop loss up closer to your entry or even to the break even. Then as price moves further in your favor, you keep adjusting your stop loss to progressively lock in profits, which in many cases it reduces the stress and protecting your account. So now that you clearly understand this entire trading strategy step by step, let's actually put this into the real world action so you can see exactly how powerful it is in the practice. And I'm going to show you two recent trades that I took, which is going to be AUDJPY and GBPJPY. These are the trades that I took on top of the ones that I showed in the beginning of my video, and this is the exact same method that we have covered today. Okay, so this is actually the GBPJPY trade that I executed on the 1 minute time frame. Of course, I had all over the screen recording, so we're gonna just go through it. As you can see, I have identified my uptrend. The price has been making higher highs, but of course, recently it started making those lower highs, which means the sellers, they're stepping into the market and the price has broken down the ascending trend line. So what I actually did is I start, as you can see, marking out and telling you guys that if the price, it rejects and close below this ascending trend line, we have a strong chance to potentially, retest those previous bottom zones. I just start, marking out, seeing where the candlestick may close so I can prepare my lot sizes, my whole risk management. As you can see, in this case, we have some sort of resistance level over here, and I am adjusting my position right now. As you can see, the risk to ratio is absolutely beautiful. It's 2.78. It's more than enough. So we just gonna go over. As you can see, I executed my trade right over here after checking the higher time frame, and here I am. I just adjusted my take profit and stop loss levels. If you can see, the current candlestick is rejecting off that uptrend once again. The time flies, the price is kind of doing, and it started dropping beautifully towards the downside. So I marked this level, as you can see right over here, because, well, this actual candlestick, it broke into the new low, which shows a strong bearish momentum in the market. And it was actually very early morning session, but I got alert on my phone and I just had to jump onto the chart and execute the trade. So here we go. The price is dropping down nicely into the profit. But even now, as you can see, it's forming those beautiful lower highs and lower lows. So probably here you might have panicked and start thinking of closing your position, but I was calm as a cucumber and we let the trade fully play out. Of course, I could have closed the half position at that low, at that support level. As you can see, it wicked out again. It got respected. But you know what? I was like, fuck it. I'm gonna keep on holding. It's gonna follow. It's gonna hit my take profit target. And as you can see, it keeps going back. It keeps rejecting, But finally, it made another low right over here. And we are dropping down. And it was a very beautiful trade because it hit my take profit target. As you can see, Pepperstone, my lovely broker, has closed the trade for me, £540. So as you can see, I do live trades, I do live trading. I have signals group, man. So this was a very beautiful session on GBPJPY. Okay, guys, so the next trade I took was AUDJPY New Zealand. So we quickly gonna run it over why I executed the trade, what was the whole process behind it, because I really want to show you guys how this trading strategy works in the real market conditions. So if we're gonna go ahead and play this feedback, because we don't have 1 hour and 10 minutes to watch the fully play, but the initial analysis was that we are seeing this beautiful trend line. The price is indeed making higher highs and higher lows. However, at this point, as you can see, the price has actually failed to make that new higher high as I marked on the chart. So of course, as I said, if we are seeing the break through the ascending trend line, we have that retest with the confirmation candle. We are looking for a drop down. And in this case, I have also marked the next support level zones. So at least I know how to plan it out, my, stop losses and take profit levels. And as you can see, this was the bigger support and the most recent rejection level was just around over here. Okay, so the next thing I did is I went on the 5-minute time frame, and as you can see, we also have a resistance level over here. You can see multiple rejections from it, so more than likely the price is going to react and more than likely is going to continue trending down following the higher time frame bias. And as you can see, as it happened, I entered my trade on 94400 because we had a beautiful beautiful bearish engulfing. And as you can see, another beautiful bearish engulfing candlestick closure, and we are going down nicely. It's finding some resistance and it's beautifully dropping towards the downside. So once again, I marked a new trend going on because as you can see, now we shifted from a bullish trend to a bearish one. The price now is making lower highs and lower lows, and I am expecting a super strong trend because, well, as we saw on the 5-minute time frame, the price has bounced off the resistance zone and more than likely is going to retest those previous support levels. And as you can see, it's also finding some sort of resistance level over here. So we are just patiently sitting, you know. I had set my take profit target. So I will actually attach a screen recording from my broker because, well, I had to adjust my take profit level just because we saw some sort of support level over here. And I was just, you know, well, it's gonna still drop down, but I actually want to take my profits on a logical area. So as you can see, the price is beautifully going down. So as you can see, it's finding that support level, as you can see. So that's why, as I said, I had to adjust it and kind of, you know, make logical decisions. So as you can see, I also adjusted my stop loss once again because, well, the price has been dropping beautifully down. And in this case, I think very soon my take profit was hit on this beautiful AUD Japanese yen trade. So I really hope that you guys enjoyed watching this video, and if you did, make sure to like it, you know, share it with your friends. And of course, if you do have any questions, you can always ask me in the comment section down below and I will do my best to help you out. Feel free to check out our VIP trading group where we're literally smashing the markets every single day. We haven't lost 8 or 12 trades in a row, which is absolutely nuts, and the members are super happy. Thank you very much once again, and I will catch you in the next one. Bye!